Hello everyone, my name is Vaishnavi Gauri and today I am going to explain the important concept from company's final account that are other long-term liabilities, long-term provision and short-term borrowing. These items comes under the liability side of balance sheet and help us to understand the financial obligation of the company. So let's understand this concept step by step with the example. So, company's final account contain the statement of profit and loss and balance sheet. And balance sheet contained asset, equity and liability. So, our today's concept comes under the liabilities. So, our first concept is other long-term liability. So, other long-term liability are the obligation of the company that are payable after 12 months and whose amount is certain. So, example of other long-term liabilities are debenture. Debenture are long-term loan and long-term loan from banks and financial institution. Our third example is security deposit received, etc. This is important to help in raising long-term funds for the growth and expansion of the company, and it helps to reduce the immediate cash outflow. It shows long-term financial commitment of its company and helps investor to assess the long-term solvency. So our second concept is long-term provision. Long-term provisions are the amount set aside by company for future expenses or losses where the amount and timing is uncertain and payment is payable after 12 months. So example of long-term provisions are provision of gratuity. Provision of gratuity is the estimated amount which is set aside to pay the employee for their retirement and resignation in the future. And also there other examples are provision of pension, provision of long-term employee benefits and provision of warranty. So its importance is it follows the preceded concept of accounting. It helps us to meeting the future obligation smoothly, prevent the financial burden in the future, and it presents the true and fair view of financial statements. So our third concept today we are going to understand is short-term borrowing. Short-term borrowing are the loan or borrowing which is taken by company which is payable of within the 12 months and it is used to manage day-to-day business operations. The example of short-term borrowing is bank overdraft. Bank overdraft is the facility where company withdraw more money that is than available in its bank account for short-term needs. And also cash credit. Cash credit is short-term loan and short-term loans which is amount borrowed for less than 1 year to manage the immediate business expenses, and loan repayable on the demand. It is other example. So it's important and purpose of short-term borrowing is it helps to manage the working capital requirements and needs. It ensures the smooth day-to-day business operations, and it helps to maintain the liquidity of business, and it is useful during the seasonal or temporary cash shortage. So in conclusion, other long-term liabilities shows fixed obligation payable in long run. A long-term provision represent future estimated expenses, and short-term borrowing help in managing daily operation needs. So together, this liability help stakeholder to understand financial stability, liquidity, and solvency of the company. So this is all for the today, and if you found this explanation helpful, please like, share, and subscribe. Thank you.